Hello and welcome to another edition of Market Briefing. I'm Martin Bakkerdax, European business editor here at the IB Times UK. Super Thursday is dominating trading around the region. A lot of earnings from the biggest and most important companies around Europe were published today. Let me talk about what happened last night in the United States first, however, because that is coloring a lot of the trading dimension. We had what is called a pause in U.S. economic activity in the fourth quarter of last year. That surprised 0.1% contraction, putting investors on edge, but they were soothed a little bit, of course, a few hours later by the statement from the U.S. Federal Reserve, Chairman Ben Bernanke saying he's going to stay in the game with that $85 billion per month of asset purchases until the economy finds its footing. It does tee up a very important payroll data figure, which will be published tomorrow from the U.S. Labor Department, but at the moment, investors are getting the central bank support that they need. With respect to earnings, too many to mention. We'll just highlight some of them that you can find on the IB Times UK economy page. We had the worst quarterly loss in at least 4 years for Deutsche Bank, the biggest lender in Europe, had to post a $2.2 billion red figure for the three-month period ending in December. They had to take a $10 billion non-interest charge related to not only restructuring, but setting aside some cash with respect to what could be a really serious LIBOR manipulation-related fine. You'll remember that UBS, the biggest bank in Switzerland, had to pay about $1.5 billion US. Deutsche Bank has set aside at least 1 billion euros, and some analysts suggest the figure could be even higher. Santander, the biggest lender in Spain, posted a modest rise in profits for the fourth quarter. They came in at 401 million euros, but for the whole year of 2012, the bank had to set aside 18.8 billion euros to protect savers and depositors and indeed shareholders against potential losses for a lot of soured real estate assets in Spain. And of course, we know the housing market there has burst like no other around the region. A couple of others worth noting include Shell, Europe's biggest oil company, just missing analyst estimates with its full year and fourth quarter profit figures. They have boosted the dividend, though, a hefty 4.7%, but they are cautious about investment headwinds into the year ahead, and that's put the stock on the back foot. It fell a little bit more than 1%, and that dragged down the FTSE 100. Around the region, stock markets are giving back gains, but in no great significance. I think investors really are waiting for that payroll data figure tomorrow to drive markets into the coming weeks. We'll keep an eye on those stories and, of course, all of the others. Do check us out, please, at theibtimes.co.uk.